You're listening to Blockchain 2025. The future is right now. Every week, we explore implications of the technology underpinning cryptocurrencies, blockchain.
Each episode is a standalone examination of one industry broken into 3 segments: a basic overview, blockchain's disruptive impact, and relevant crypto projects.
Blockchain 2025 is part of the Bitcoin.com podcast network. Learn about Bitcoin, create a wallet, and buy your first Satoshis all at Bitcoin.com.
Kelso, how you doing, man? I got good news. The feedback on our new intro was very positive.
Excellent. Greetings again from beautiful La Jolla, California, and from the news desk at Bitcoin.com. How great is that intro? You have Naomi Brockwell, the Aussie, doing a J-pop. Bitcoin. I mean, you can't not love that. And then Guilfoyle from Silicon Valley. Come on, man. You're not going to get better than this. And it's free. We don't charge you anything.
Yeah, man. This is exciting. I mean, we got a bunch of shows on the network now. We have 3 shows. Great guest on Humans of Bitcoin, the news. We're talking about Coinbase today. We had Josh Ellithorpe of Coinbase on the show. We have a podcast in Espanol, a Spanish episode called Calle Bitcoin coming out. I mean, the network's growing. And yeah, all we need to wait for now is the ecosystem to catch up to the excitement that at least you and I have.
Yeah, the crypto winter has definitely spread into spring and now a little bit of summer, but I think it's gonna come back. So for sure.
For sure. And we always joke about some of the nonsense technical analysis, but we think it's going to come back / we hope it's going to come back because,
Sure.
If this winter goes on for a couple of years, we're not really going to have any jobs.
Right. Small point there.
Is that true? But yeah. And listen, today's episode for me is pretty interesting because we did prediction markets and I had to make a point in the episode. Listeners, this could change everything if prediction markets come into effect. This is sci-fi. And it's another one, decentralized DEX, decentralized cryptocurrency exchanges. And what that means, being able to put your USB wallet, right? You don't have a bank account now, you just have a USB drive with your password on it, a special USB drive like a Ledger or Trezor or something else. And you put an order in, you unplug your USB, you travel to Africa, Asia, somewhere else in the world that's on this decentralized exchange. As soon as it goes through, you can connect to any type of other device and your assets are with you. And it was just a one-to-one trade. It's not the typical stock account where you go from your bank account to a brokerage and the brokerage uses all these other intermediaries to buy the share of Apple stock and Goldman Sachs, blah, blah, blah. And then it's settled. It takes a couple of days to settle into your account, but it's only in your account that's connected to your bank account. You can sell it anywhere. So to me, that's a pretty amazing concept. And if you got lost there, don't worry. We're going to slowly walk through that. That was kind of my enthusiastic description right there.
I love it. That example is so good, and that's why I wanted you to highlight it. It's a fantastic example. In the financial technology world, we call all those little speed bumps and those intermediaries, as you refer to them, as frictions. And they necessarily come with a cost. So whatever the price of equities or assets or anything really is that you can trade, that's all baked in. So I think prices would come down. There's a lot of implications of this, but yeah, man, being able to trade, theoretically, any asset, any financial product in a decentralized manner, and like you say, putting out on a USB stick and just kind of traveling around the world. I mean, Bastiat, French economist, talked about the unseen. We can't even imagine what will result as a consequence of that.
For sure. And listen, we could talk about NASDAQ, but I'll probably save that for the upcoming interview with Caitlin Long. She knows a lot more. And
Wait. You got Caitlin Long?
Yeah.
Like the Wyoming stud, former symbiont, Wall Street. You got her. She's going to be your guest?
Yeah. And it's funny, Kelso, because we talked about religion and how it gets very religious. So if you can get someone from Wall Street to convert the Bitcoin ideal, like she's a convert. Yeah. So I want to ask her all those complicated questions I have about NASDAQ and how it could be affected by decentralized exchanges. Yeah. So we're pumped. That's coming up on Humans of Bitcoin. But today, let's just focus on something that's a little bit easier to understand. And those are cryptocurrency exchanges, Coinbase, Bitfinex, Binance, which is based out of Asia, and they just kind of came up really fast and strong. Poloniex, which is owned by Goldman Sachs and ironically doesn't really have much volume anymore after they asked for KYC and AML and other things, but they're like number 30 in volume and they used to be number 1 a year and a half ago, or at least top 5. So things have changed, but there's no doubt, like you mentioned, the friction. Onboarding people, myself included, it's nice having a cryptocurrency exchange, a centralized cryptocurrency exchange like Coinbase. And Coinbase has done a phenomenal job. I mean, 100,000 users onboarded a day at some points during 2017.
Yeah, I remember during the run-up coming across that, just being on the news desk at Bitcoin.com, it was all Coinbase all the time, man. Story after story after story after story. Yeah, Coinbase crushes it. They are our Google, for lack of a better analogy. They are our Apple, our Microsoft. When all the dust settles, like from the, say, the .com days where they had petrock.com and so on, now you have the Googles and you have the Microsofts and Apples and so on. This is what's going to happen when crypto shakes out in a few years. Coinbase will be one of them left. They do an amazing job. Brian Armstrong is a friggin' stud. If you follow him on Twitter, he's also inspiring. He does it really well. They're hiring the best and brightest. They're bringing up, I think they have like 14 million users, something crazy like that. Their interface is easy, just like In-N-Out Burger, or if you look at Google, it's so plain. It just sits there, and similar to In-N-Out Burger in the United States, they concentrate on what they do well. It's a very plain menu. It's just straight, no chaser. The same, of course, is with Coinbase. For currencies, linked to your bank account. They give you access to a debit card that you can load up. I can't say enough great things about them. And again, they're a centralized exchange. You don't have to do the icky things like hold your keys, be worried about whether your hardware, where you're storing your crypto. It is a revolutionary company, and they do some amazing things.
And Kelso, this is really interesting. You mentioned Coinbase and Charles Schwab Bank. First, if you're listening, why is there friction if Coinbase is doing such a great job? The reason is, the ethos of the original Bitcoin is you don't need a bank account, right? It's peer-to-peer, and you don't have to use a bank. And Coinbase has essentially become a very large, well-capitalized bank. It recently passed Charles Schwab. And just talking about how good Coinbase is, I have to admit, I've sold cryptocurrency for US dollars on Coinbase and withdrawn into my bank account. It's taken one business day. My Schwab account, like I mentioned, Coinbase has passed Schwab in terms of size. If I want to send from one bank to Schwab, it takes 4 business days, which is a long time.
It's a lifetime in financial work.
It's a lifetime. Yeah. And so obviously there's the ethos, it should be decentralized. You mentioned the private keys, right? The upside of private keys is a lot of people, to be honest, in this rudimentary infrastructure of Bitcoin, people have lost passwords. They've gotten hacked. But people have also gotten hacked on Coinbase, and other exchanges have been hacked themselves.
Yep.
Coinbase has not been hacked per se, but people's Coinbase accounts have been hacked. A little bit different, but the Mt. Gox hack is the biggest hack that everyone knows about from 2013 that almost crushed Bitcoin. So we mentioned that you don't have control of your keys. Centralized exchanges can get hacked. What other problems are there with centralized exchanges?
There are plenty, and we're sticking with Coinbase because it's sort of the most popular example, but I don't want to give listeners the impression that it's the only one out there. But again, staying with Coinbase, right away, the IRS, Internal Revenue Service for the United States, once gains were being made and it was pretty clear that there were enough folks out there clocking some pretty good money, the IRS skipped over everybody else and literally went after Coinbase because they were the biggest in the field there, and took them to court. Coinbase was a good guy in that regard, and they fought hard, but ultimately the judge said, hey, you got to give over this information. And I believe they worked out where there's I don't think it's smaller users, but they definitely had to give up personal and financial information of their users to the IRS, which of course the IRS would then use to either prosecute or at least snag some of that money. So that is an inherent danger in these centralized exchanges. Governments can hector them, cajole them. There are just a lot of problems with a centralized exchange. So even though we set it up as doing some wonderful things, which we both acknowledge, going forward, it does violate literally the entire point of cryptocurrency,
which is not to have a bank account.
Exactly.
And I will say that some founders of cryptocurrency exchanges have said privately or publicly that they've realized that with this decentralized exchanges, which we'll talk in a minute, if Bitcoin succeeds, it will effectively take them out of business. So 10 years from now, they're aware that they probably won't be in business. And I want to tell one more thing about Coinbase. So Brian Armstrong, the CEO, he started a company, blockchain.info, with Ben Reeves. And there was a philosophical discussion argument where Reeves did not want to do what Coinbase is doing, being a centralized exchange. They always wanted users to hold their private keys. Brian Armstrong, he strong-armed the company, Coinbase has really blown up, and blockchain.info has done very well as well, but not nearly as big. Blockchain.info, also known now as blockchain.com, which is a wallet that's interface that you can use, but they don't really hold your keys, more along the lines of the Bitcoin ethos. But there's no doubt that Coinbase is the big player today.
Yeah, and they're actively courting. See, now, you can look at this two different ways, but from my perspective, this is a problem. Coinbase is actively out there courting regulation. And again, some people will say, look, they're just being smart. They know it's coming anyway, so you might as well dance with the devil rather than being blindsided by it. So they're going after regulation, meaning they're accepting it, they're encouraging it. They're hiring really heavy hitters from Wall Street and Silicon Valley. These things to me point to, again, a dramatic shift because, the whole point of Bitcoin, which spawned the cryptocurrency revolution, was to get out from under that trust system, to have that third party moved, because automatically when you have a bank, in the sense that we understand what a bank is, it presupposes a government, it presupposes regulation, and they can stop your purchases. They can get in and manipulate your wealth. And so the irony is that Coinbase has in effect co-opted the Bitcoin revolution in many a sense, because I think if you ask people popularly what Bitcoin is, I think they would just say something along the line of, it's just an ease of use, the money of the internet or something. And obviously we believe it's much more than that. So just hearkening back to the ethos side of it, Coinbase continues to seek out regulators to work side by side with them, which, makes some strategic sense. But it goes against that basic philosophy of Bitcoin, which is you're your own bank. You're your own Swiss bank account. It's in your pocket. It's in your phone. And you have ultimate control over that. And the irony of all ironies that I don't think Satoshi Nakamoto saw was that a bank like Coinbase has more or less co-opted the crypto revolution. So
for sure. There's also, not just on Coinbase, there's been some flash crashes, which happened on NASDAQ. This can happen.
Sure.
And so moving into disruption, how can blockchain, in this case, a decentralized exchange using blockchain technology, disrupt the centralized exchanges? So we mentioned one, allowing anybody to interact with a decentralized exchange. You can, in the future and with certain exchanges now, you can just connect your USB storage drive anywhere in the world and trade with anyone, anywhere in the world. So I think accessibility, right? Most people don't have access to the NASDAQ exchange. One, meaning that you need a bank account, just like Coinbase, you need a bank account. But if you have a crypto on your USB, you can make a trade with anybody. And that's pretty exciting.
Super, super powerful, but you don't want to lose sight of what a decentralized exchange could do theoretically is the privacy aspect. I mean, that's what cash is. So when, you get into people who really embrace crypto as a medium of exchange, you'll hear them say it's cash. It's a peer-to-peer cash. That's the whole point of it. And why that's so revolutionary is because of the anonymity or the pseudo-anonymity of it. The privacy aspect, that there's no minder. There's no one behind you monitoring. Just think about, listeners, your daily transaction limits for ATM machines or these sorts of things. We're so used to it that it doesn't really faze us anymore. But once you get into crypto and you can just exchange it in and out of fiat or other, pretty soon I think hopefully atomic swaps or, getting into other cryptocurrencies, basically you're free. You're untethered now.
Listeners, what is an atomic swap? Well, an atomic swap is a smart contract that is between two different blockchains, let's say the Bitcoin blockchain and the Ethereum blockchain, and allows a direct transfer without any intermediaries. So a lot of decentralized exchanges are trying to implement this technology. For example, you could trade 1 Ether for 0.2 Bitcoin directly, and the contract itself protects and makes sure that if one party doesn't send their Ether or Bitcoin, then the contract doesn't go through. It's a far out technology, still in the early stages. Back to the show. There's no doubt about it. And with all these intermediaries, Coinbase and Bitfinex, et cetera, the whole idea of having less intermediaries means less fees. Trading will be cheaper.
Right. Again, that's a friction, and it's more or less a tax on your money. I mean, we think of taxes as coming from governments, but these fees where you're, onboarding or, off-ramping or whatever in and out of currencies and you have to pay, they can become quite prohibitive. But yeah, I also wanted to make sure we touch on, and you did more or less with the hacks of these decentralized exchanges. It's still going on today. I mean, just this month alone, there are 40 million, 31 million haircuts with CoinRail and Bithumb. We're still dealing with the Gox mess from 2014. I mean, we just had a story on news.bitcoin.com about how they're just now, 4 years out? They're just now trying to get some of the money back to the people who lost it. And then the Italian exchange, BitGrail, it's like $170 million. People lost their entire savings. People lost their entire wealth through this kind of thing. And governments aren't too keen as to, once you thumb your nose at them and you go, oh, they stole my cryptocurrency. Well, yeah, of course they did. There's no FDIC. There's no anything. Governments have basically taken to telling their citizens, look, use it at your own peril. So that's part of I wanted to make sure we hit that very, very hard, that these hacks, these missing funds, even if they're not hacks, they're people in there stealing and so on. This is all around the world, so it's not in any one particular place. India's had a huge problem with it as well.
For sure. It's worldwide. And I guess the exchanges have more money now after 2017, but the Bitfinex, which is one of the largest exchanges in the world, is getting hacked. Yeah, so that's an issue. And using a decentralized exchange when it works purest is you don't have to trust your cryptocurrency in a decentralized exchange. They simply serve as the order book, which leads me to the next problem is these centralized exchanges, big banks, Goldman Sachs, et cetera, all their front running using insider information of big trades and all this corruption from banks. I mean, here's an example. There's so many.
Which, by the way, just to interrupt, Coinbase has been accused with the Bitcoin Cash rollout of insider trading.
That's fair. Yeah, I've had some pretty big wigs tell me at some of these conferences that they think the people from Coinbase will go to jail. I disagree, just because what I'm about to tell you with Bank of America, just no one went to jail for the financial crisis. I just think when you're that big, nothing's going to happen. But Bank of America admitted to doctoring paperwork on over 16 million market orders from institutional clients, telling their clients, okay, we're going to immediately execute these trades. But they actually routed these orders to other firms before executing them. So what does that mean?
A kind of like malicious arbitrage, right?
Right. So they know all these big trades are going to go in. And so if someone's going to buy a bunch of X stock, before they execute, they'll buy some of that stock themselves and benefit from the increase in the price, which is just illegal insider trading. And it's happening because of the centrality of what's happening.
I don't care about insider trading.
Yeah, I just don't see insider trading as that big of a deal, and I certainly don't see it as a crime. It is relative to the contract you sign when you go into equities markets and all the regulation that follows. But as a crime, as a moral crime, I just don't see it. It's just information, and insiders by definition tend to have a better grasp of things. And I'd like to know that information. So if they're all running to sell their shares or to gain a position or whatever, that might be useful to me. Again, it's just information. The market, what someone calls manipulation, the next person calls, hard selling or pump and dump. I mean, there's a whole bunch of silliness going on linguistically. But as far as insider trading goes, no, I don't have an issue with it at all. I might have an issue with the fact that these guys set up barriers to entry, such as insider trading, and then violate it themselves. That seems obviously bad.
And I don't want any, outside laws, and I want these exchanges to govern themselves ultimately. But in case somebody's listening going, these guys really want all these rules. No. We're saying that these big institutions have instituted these rules, have lobbied for them, have brought them, have used the state, the government they've wielded the power of the state to get between people and their money. And then they flout the same laws, I'm trying not to cuss, the same effing laws that they put in place. So here they are going around their own laws. So yeah, that's totally infuriating. And the Bank of America example is fantastic.
For sure. And before we move on to the projects, some of them have talked about shares of stock, bonds, whatever, using a decentralized exchange. It's possible that NASDAQ won't exist 20 years from now, that you'll be able to trade any asset using a decentralized exchange, instantly with someone from all over the world. So I think that right there is the revolution.
And as much as I'm in the space, as much as I'm as deep as probably anybody can be, I can't conceive of that. It just blows my mind that, there would be no NASDAQ. Wow. I mean, that's an amazing idea.
Well, the brilliant venture capitalist, the founder of AngelList, Naval Ravikant, has this quote where he's just like, I'm kind of disgusted with Wall Street, but when I walk down it, I do smirk knowing that 20 years from now, it won't exist, which is a pretty powerful statement. And Naval Ravikant has a lot of quotes like that when it comes to cryptocurrency. He's just a very deep thinker. I mean, one of his top books, which I recently read, is Siddhartha. He's pretty interesting, man. But yeah, I mean, Kelso, the projects that are trying to solve, there's one thing that I should mention, because we have to be fair, that centralized exchanges do a great job of, and that's providing liquidity. And listeners, for those that don't know what liquidity is, it's just volume, meaning a lot of buyers and a lot of sellers. Because if you're trying to trade specific cryptocurrency and there's not many orders out there, it's going to be very hard for your order to get filled. And that's a challenge facing decentralized exchanges.
Because whenever you exchange, like you want to on-ramp or off-ramp, fiat is always the big concern as people jump in and out of currencies. That presupposes there's someone on the other side with dough or crypto. And among all the other problems, or not problems, but issues that decentralized exchanges have, the number one problem is liquidity. So people get excited about it. Like we're going to mention a couple projects. They get excited and they go to and there's not enough people there to exchange with. That's also another very important point.
Meaning you could buy $300 of the coin if you could get your order filled, and it would drive up the price. Where obviously go to Coinbase, I buy $300 worth of Ethereum or Bitcoin Cash or Bitcoin. It doesn't matter. It's not going to affect the price at all. And right now, this is in the infancy, just like prediction markets, a little bit further along than prediction markets because they actually have products that are working. But yeah, they're quite slow and cumbersome. They take a long time. And then Ether Delta actually got hacked because it's not truly decentralized. But yeah, let's talk about some of these projects. I'm just going to read off a list here. BISC, B-I-S-Q, BitShares, which is by the founder of EOS, Waves, IDEX, AirSwap, and the 0x protocol. And there's different things on here. I mean, with Waves and BitShares, you can actually create your own cryptocurrency. Like we can make Kelso coin for about like $30, which is pretty cool.
Trademark, by the way.
Trademark, yeah. So if anyone wants Kelso coin, it's a trademark coin. Not sure, it might have some speculative value, but yeah, I mean, like without going into the huge details here, Kelso, let's go into a couple of them. Tell us a little bit about BISC, because you did an article on them, which we'll link to in the show notes.
I sure did, and it's back when we were hot and heavy here in the halcyon days of December of 2017. All right, BISC. It is a decentralized exchange in the sense that we've been discussing it, and it's one of the premier offerings out there. It's a complete desktop app. It has a wallet, and basically, I believe they're, if not the most decentralized exchange, they're pretty close. Like, there's no one person in charge, which is kind of mind-blowing as well. And they can move crypto to fiat, which is very important. And more are doing this, but BISC was a leader in this regard. There's no know your customer or anti-money laundering requirements. You don't have to tell them who you are. You don't have to give them bank account information. They don't hold your keys. In other words, the anti-Coinbase basically is what BISC is.
Interesting. And so you mentioned the anti-Coinbase. It's ironic. We said at the beginning of this episode that centralized exchanges see just how much faster, cheaper, and powerful decentralized exchanges have keyword potential to be. And they're aware of this. So, Bitfinex, they started ETHFinex, which is going to be a decentralized exchange. Right now, it's kind of hybrid, centralized, decentralized. And then this is pretty interesting. Coinbase acquired a decentralized exchange called Paradex. And I'll give you a few other facts. My favorite project in the decentralized exchange space is the 0x protocol. Remember how we mentioned, Kelso, the problem with volume, that there's not much liquidity or people using these decentralized exchanges?
That is interesting. Yeah.
So 0x protocol said, okay, we're going to build a base layer protocol for decentralized exchanges to build upon. So every exchange that's built on top of the protocol can share and benefit from the liquidity of the other decentralized exchanges. So if you have 100 decentralized exchanges and most of them don't have much volume, all of a sudden they can add in volume from these other 99 exchanges. Another thing that's really interesting to me.
That's crazy.
Yeah, it's really cool. And the 0x protocol, they have offices in California, Northern California, right next to Coinbase. So the fact that Coinbase acquires a decentralized exchange built on top of 0x, I find that to be pretty interesting. And it seems that Coinbase, they want to hedge their bets, but also maybe because they're so highly regulated, to have an offering for places around the world and people that aren't eligible to use Coinbase.
That is the capitalist imperative. I mean, that's why we're all here, essentially. When you see markets being made, you definitely want a piece of them. So that's very, very smart of Coinbase and the other centralized exchanges. Kind of see the writing on the wall. Whether or not decentralized exchanges are the future, I believe that they're compelling enough. So it kind of comes down to like proportional representation. They don't have to take the entire market, but they can take a substantial chunk of it. For those of us who officially had an ass full of, high fees and regulations and trying to pull your money off and then the IRS coming after you, all that stuff, we're just sick of it. And so you and I and others like us are going to seek out decentralized exchanges. So it behooves them to find a place for them to, wet their beaks, as it were.
Yeah. And also, we did mention front-running insider trading. A fair objection is like, well, couldn't you do that on decentralized exchanges? Yes, you can. Obviously, there's all these projects have their own implementations, how to prevent front-running. AirSwap is pretty interesting because they use a peer-to-peer trading process with a private order book, because if you can't see the order book, you don't know what orders are there, then it's impossible to front-run or engage in insider trading. So AirSwap's another interesting one out there.
Have you used that?
I have not used it. I've used Radar Relay, which is built on top of 0x, and I'll tell you why it's cool. I made some trades with that. It's just so cool to hook in I actually showed this to friends and family, and I don't think they quite got it, understandably. But for me, I was like, when you try to trade a stock, look at all the intermediaries and fees. I just put in my little USB drive here, set the trade, unplug it, no risk there, and wait for the trade to be executed, the order to get filled. It's quite fascinating, man. Like we talked about this, whether it's digitized gold, the shares in a private company, any type of currencies that can be put on a blockchain or digital currencies, real estate tokens, which we've talked about before, whatever you want, any types of transactions can be traded, shares of stock on a decentralized exchange directly with anyone in the world. To me, that's so cool. But I have to admit that right now it's going to take time. And this is early days. It's very complex technology, way above Kelso and I's heads, but we know enough to know that it's really complicated. But think about that. I like the power that a decentralized exchange allows to people all around the world. And so I'm bullish about it.
It just goes back to the entire point of cryptocurrency, as far as I'm concerned. And that is that you are in control of your funds, that you are the ultimate decider when it comes to how these things are meted out or prosecuted or however you want to spend it. Getting away from banks and any kind of centralized monetary authority is a revolutionary act. Understand that those systems are the lifeblood of some pretty horrible things that go on in the world. And if you can escape, get out of them, even in small ways, at the very least, if you're like me into crypto, you definitely sleep better at night.
For sure. Well, Kelso, great show. Listeners, I got to ask you, please subscribe, share, leave reviews, anything you can do to get the show, get the word out there, get more people on here. We really appreciate it. And yeah, we'll be back next week with a new topic that Kelso and I will decide. And I think we'll be pretty excited about it.
For sure.
All right. Thank you, Kelso, and see you next week.
Yeah. And until next week, thanks again, Matt.
Thanks for listening to the Bitcoin.com podcast network. To learn more about our shows, visit Bitcoin.com/podcast. Bitcoin.com Podcast Network.